Jim Rickards, West Shore Fund's chief global strategist, and also with us on set, or I should say, Jim is also the author of The Death of Money, that book you're looking at. Additionally, on set, we have Jens Nordvig. He is managing director of currency research at Nomura. Gentlemen, great to have you on set here this morning. So Mark was just trying to walk us through the market reaction.
Let's have Jim on Twitter this weekend.
Oh.
If you didn't know what was happening on the Greek situation, this was a good guy to cover.
All right.
Well, that was following Joe Weisenthal also. So
Joe, pretty good.
It's a mutual admiration society here. Jens, perhaps let's start with you. Why isn't the euro moving actually more? Why is it holding above 110 as Greece appears to step closer and closer to default?
I think, to be honest, we were all sitting in the office on Sunday because we wanted to be there for the Asian Open, and the knee-jerk was the euro traded lower, as we just saw on those charts. But what we really were waiting for was what is the contagion effect going to be? And what is very, very different today from 2011 and 2012 is that we have a lot of backstop in place for the Spanish market, for the Italian market. And what we saw was even if we opened very weak in those bond markets, we actually managed to recover. So the contagion effect was not as bad as some people have feared, and the euro has recovered with that sort of relaxation around the bonds.
James, what do you think?
This looks like a German miscalculation to me. Of course, the Germans have a history of doing that, World War I, World War II. But I think the Germans are going to have to blink and back away. I actually have this is the Greek plan, this is the ECB Euro plan. They're not that far apart. If you read them line by line, they're pretty close. And Varoufakis...
What?
They're not. Varoufakis has said that. He divides between what he calls parametrics, which are, 2.5% of GDP, versus the structural plan. The parametrics are extremely close, and he wants a long-term structural solution. He makes a lot of sense. For example, Europe complains that Greek pensions are too high as a percentage of GDP. He says pensions have come down 40%. What happened was the GDP imploded. Well, sure, the fraction goes up when you implode the denominator. He's making some sense. I think Germany miscalculated. They pushed Greece a little too far. Maybe Greece was impetuous in their reaction. They're going to have to back away from this and get this done.
And Tom Keene asked the question this morning, whose fault is all this? Who got Greece into this situation?
Well, over the long term, Greece got themselves with a little help from our friends at Goldman Sachs, cooking the books back in the early part of the decade. No, they did. But look, everyone's in this together. This is not the time for finger pointing. This is the time for a little... By the way, where's the U.S. on this? Where's the leadership? Where's the James Baker or the Bob Rubin? Rubin.
Well, I think everyone in the U.S., last thing anybody wants is a failed state on the Aegean.
Well,
they're hoping that Greece...
That's a good point. They're a NATO member. The U.S. Sixth Fleet doesn't exist. It's just whoever's passing by. Greece has a pretty good Navy. They control the sea lanes. Do we want them coasting up to Russia? Or there's also a relationship because of the Orthodox religion. So a lot going on here behind the scenes. But
should the U.S. be doing more here? Should we see Jack Lew swooping in?
I think they're trying to sort of get the Europeans to behave like they would like them to behave, but I think it's very difficult for them to be a direct party. We already have a very complicated negotiation with the Troika, even though we're not allowed to call them Troika anymore, and then the Greeks. So there's a lot of parties at the table. I think it's difficult to have a fifth party really participate in these negotiations. And certainly there's very few people who are willing to actually put money to work, and there will be no U.S. money that comes to Greece's rescue here.
Let's get back to the topic of contagion, because I think that's what the U.S. audience waking up this morning is trying to figure out, whether or not they need to change their U.S. equity strategy on the basis of this news. On many levels, it does look like, in fact, that European creditors have figured out ways to ring-fence the risk. You're not seeing this huge move in Italian and Spanish yields the way you did in 2011, 2012. You are, though, when Mark Barton pulled up that chart, the biggest sellers are all Italian and Spanish banks.
Well,
if Greece actually does not make this payment tomorrow, who's on the line?
Well, first of all, it's not technically a default. Ben Steele, Council of Foreign Relations, said they're in arrears, but it's not technically a default. It won't start across default. There are a number of ways out of this. By the way, the European Central Bank owes Greece billions from the profits on the securities market transactions. So.
What?
Well, Varoufakis said, why don't you take the money you owe us and pay the IMF? So that's one way out. The Greeks might vote yes. That's another way out. Or the Greeks could call off the referendum. So you do have a couple of paths out of this.
I would say, if you look at the market moves, the reason why we have very big moves today is that people got very, very relaxed during the course of last week. Greek bank stocks were up 30% last week. We're giving back the gains from last
Simply
week.
because they thought, well, it's just a game of brinksmanship. At the end of the day, they'll swoop in. We'll keep kicking
That's right.
can.
That's exactly right. So there really was a shock to a lot of people in the market that this deal fell through. And obviously, it's pretty unconventional what he's doing.
Okay, so we're showing the three big Greek banks, but all of these are basically penny stocks at this point. They've sold off 90%.
But even if you can do the same calculation with the Euro stocks. The Euro stocks index was up 5% last week. Now we're down down 3.5%, right? So we're just giving back the gains from last week. And I think that really tells you, in the scheme of things, the contagion so far is pretty moderate. And unless this really spills over in a political way where we have to worry about the politics in Spain or the politics in Italy, I think it's going to be more what we see today.
Contagion is a slow-motion process. Remember 97, 98. It started in Thailand in June 97, ended up with Russia and LTCM in August 98. That was 15 months. 07, 08, that panic started in 07 with the Bear Stearns hedge funds, and it didn't come to full fruition until 2008. So these things can take a year or more to play out. So I wouldn't, just because it didn't happen in 2 seconds, I wouldn't underestimate contagion.
Haven't you seen the movie Contagion? We could all get Ebola. That's the whole point.
I don't think
Contagion sparks immediate fear.
Yeah. I think it's going to do much.
No, what's different is that we've actually had this contagion debate going on since 2010, right? So we've had like 5 years of it, but the structure of Europe has changed in the interim, right? So
and
the dynamics are different.
is no longer on the hook for Greece going bankrupt. Instead,
that's right.
Mario Draghi.
I think that's very important. Like, if you think about the direct channels of contagions, it's really like certain banks having big exposures and they need to get out of them. Bank exposures to Greece are down very, very dramatically in gross terms and in net terms even more. So I think there's one of these direct channels of contagion that has really been chopped off. Doesn't mean there's going to be no reaction, but it's a different type of reaction altogether.
It's not about the Greek banks. It's about Spain, Portugal, Italy. That hasn't been priced in yet.
Then how long before we actually see social unrest?
Well, that's a very good point. That's the real wild card. It's not so much you can manage the financial side of it when you have riots, tear gas, military responses. Then it does spin out of control. It's a very good point.
I mean, I saw pictures on Saturday of Greek parliamentarians queuing up at the ATM. If the government officials are trying to get their money.
Crazy, man.
It's crazy, man.
You have to get your old money belt out of the closet. You know, in the 80s, we traveled with money belts.
No, I have a German mother. She was always like, get a money belt. All right, Jim Rickards, Chief Global Strategist.
It's a hot look. It's a hot look.
Yeah, Prada makes one. Author of The Death of Money. Also thanks to Jens Nordvig, the Managing Director of Currency Research at Nomura.